Hey everyone, thanks for watching. So we just completed a first coffee talk about real estate investing. I tried the whole schedule event things. I'm a technology idiot, so that didn't work out well. So we just did a 45-minute live session, lots of interactions from folks about real estate investing, questions which I had a lot of fun with and will look to repeat going forward. Might do it every other Saturday or something, but I think it's something I'm gonna keep doing because it was fun. But I also wanted to continue creating content based on data on the real estate market. It's the weekend. Obviously, the markets are closed. I think this is when you generally look back and look ahead. So I wanted to talk about that. Again, uh, this video is not about stocks, right? I'm not a stock person. You don't listen to me for stock advice. I have an opinion, sure, like everybody else, but I am um, as someone who has been burned by stocks multiple times. I realize I'm an emotional investor, and I buy at the wrong time and sell at the wrong time. So I own 0 stocks. So again, while I am talking about the market, it is not about stocks. I'm looking for indications of consumer behavior. I am looking for trends in the media because I believe what I call the talking heads, which I guess I'm a talking head now, uh, also influences investors and buyers and consumers. So those are the things I'm looking for. So when you look back at last week, you saw you know, you saw the trade war come to. It's always been there, right? It's been there probably the last 6 months or so, but it took a nasty turn. I think it was Tuesday or maybe it was Monday, where basically I think the thing that kind of set the market off was I think China was called a currency manipulator, which I think hadn't occurred since 2006. And I'm not sure why that phrase was so important, right? It had been talked about and whispered for years, but suddenly appearing in a headline, I guess, kind of irked people. I don't understand how all this back channel power players work, but I do realize that seemingly thing caused the market to react. And then I think the machines took over because again, the thing about the stock market that always bothered me, and again, I say this as someone who's felt the pain before, is once the machines take over the algorithms and it's buying and selling and puts and calls and straddles and all these things, um, we the individual can see our 401k and stock portfolios collapse in a day. I don't like it when my assets can go down in a day or an hour or a minute, right? So that's why I don't own any stocks and won't own any stocks going forward. It's just not me, not for me. Uh, so that's why, again, real estate investing is the thing, because I think if you do your homework, you follow it, you trust yourself, you make your own decisions. You can buy stuff on sale, you can buy quality assets. You need to think long term, and by long term, I mean decades, not days, weeks, months, or even years. Um, so again, I think that's interesting, right? So when the machine takes over, the day is bloody, and I think it was an 850-point drop, or maybe it was 790. I don't remember now, but it was bad, right? Biggest drop of the year, I think. What I watch for is what happens next, right? I'm trying to see what are the headlines, because again, I'm trying to figure out consumer behavior, because real estate investing is a large, even if it's not real estate investing, maybe it's owner occupant purchases. I'm trying to figure out what the owner occupant is going to be thinking, right? And the first thing I'm thinking about is anybody going to cancel their escrows, right? It's one thing to say, hey, I'm not going to put an offer in, right? But you can't really track that. The thing that will be tracked and reported eventually are escrow cancellations, right? And if the media gets so negative and that it builds on itself, you'll absolutely see cancellations. And I saw it back in 06 and 07, right? As the market turned, people just started canceling because everybody wanted to save cash. So that's what I was looking for, right? Is this going to get so bad that it's going to impact consumer behavior and have some people cancel escrows and thus have more inventory on the market? So I don't, it's you never can tell in only one week. I can say based on the ups and downs of the week, probably not, but you just never know. So that's the first thing. The other thing that happened during this week was interest rates, right? Interest rates, again, on the 10-year Treasury note, last I saw or heard, it was down to 1.6 something, which is crisis level lows. Back when everybody was, you could actually see on charts where cash went up, right? Because we, as a consumer-based economy, generally speaking, we don't save very well in the U.S. and that seemed to change in '08. So rates came down. Rates are down again, and I've been on record and I've said on a couple of videos now, I did not see this coming. I was under the headline impression that the economy was good, right? Less than 4% inflation or unemployment, sorry, less than 4% inflation, crazy, um, and less than 2% inflation, but unemployment was under 4%. So um, I didn't see the need for the cut, but clearly the Fed made the right call. I mean, it's just clear as day now. And a lot of this is because of it's the world economy, right? The world economy. There are European countries that have negative interest rates. And if we stayed where we were, the dollar would be so strong and we would be hurting manufacturers, and believe me, that would ripple through. So to see the Fed get it right was awesome. I got it wrong, and I'm on record of saying that. I just didn't see the cards going that way. And frankly, this could be the first of many cuts, because I think the world economy is going through an adjustment now, and it's going to be interesting to see how this all plays out. Right? UK has one of the videos earlier in the week talked about they had a 0.2% drop in their economy. So again, we're getting flashes of recessions from around the world, and eventually we could see something like that too. So those are things that happened during the week that caught my attention as far as real estate investing. The other thing is we had some earnings announcements. Disney and Uber come to mind. Both were bad. Both, I would argue, are consumer-based businesses. So it's interesting to see consumer-based businesses already reporting bad numbers. As we go forward in the next week, it's kind of more of the same. Trying to figure out. I think the talking heads have gotten negative on real estate, and I've seen that happen before. I don't think they're paying attention very well, because I think it's the high end, right? It's Santa Clara, San Francisco, New York, places that are unaffordable, that are in trouble and could see a drop and should see a drop. Um, I think they're trying to balance some of that with lower interest rates, which is interesting. The other thing I'm going to start to look for going forward, and next week might be too soon, but maybe it's the week after, is I'm going to look for refis, right? Refinances on real estate is going to become a thing. Interest rates, even if you had a mortgage at 4%, you could refi now with a 3. And while that may not be a big deal, it's 25% less, right? Just mathematically speaking. So again, I don't know if it's probably too soon to look at it now, but I'm guessing refinances are going to be interesting. And what I'll be looking for specifically in the refinances is, are they just restructuring the debt in term, right? Or are they taking cash out? This could be a start of a big cash out refi again. I hope not. I hope we're wiser than last time, right? A lot of people were using their houses as ATMs last time. So it could be interesting to see what happens if that goes that direction again. So those are things I'm watching for. I will be watching earnings reports always. And again, more importantly, consumer-based economies or businesses, to see what's going on with the consumer. I do think businesses are going to start reporting tough quarters. It may not be yet, because again, I think they have financial engineering, and they can maybe hide one bad quarter, maybe hide 2 bad quarters. But I think that's all out there and coming. And then the last thing is, it's interesting, our farmers, right? Food is interesting for me to look at. Again, I've never been a farmer, but just looking at it is interesting, because you kind of plant months ago, quarters ago, and then you have a harvest, right? So you can't really, it's not like an assembly line where you could slow down, right? Once the seeds are planted and you watered them, what are you going to do, right? So a lot of our farmers, if you read the headlines, have lost a big consumer in China. given the whole trade war thing. And I think that decision does two things. One is it obviously hurts our farmers, right? Because they were built for capacity where I think China was their third largest consumer again at the whole, and to see that wiped out means they're going to have too much supply. So I think there's two things that happen there that are interesting. One is I think consumers in China, they're going to see inflation because what they see is less supply. So wherever they're getting the rest of their stuff, there's less of it. So that means the average consumer in China is about to have inflation in food, and food's a daily necessity. However, I think we may see deflation in the US, at least short term, because you can't adjust crops that fast. Is I wonder if we're going to see food depreciate, right? Food go down and on sale because we just have more of it. Because what used to go to China needs to go somewhere else. I would hate to think it gets thrown away. Um, I hope we feed. I hope I hope we find a way to take these perishable goods and help the people that need it if we can. Um, there's an opportunity for us to do right by some of our citizens that are maybe need some food and all of that. So that would be interesting to see if we can get ahead of that. I assume there's a huge political stuff in there, which I'll never get into. I'm just looking at the facts that we produced a lot of food. We lost the third largest buyer. So where does this other food go? I think we have an opportunity to help people, at least in the short term. Or we as consumers in the US, the prices of food in the grocery store is going to go down, which is not a bad thing. So again, that's what I'll be looking for. So that's my kind of look back on Saturday and look ahead to next week. I hope this makes sense, and everybody have a great day. Take care.